The market's been pretty volatile. Let's talk tariffs and Trump's plan on the weekly update. Okay, friends, let's talk about tariffs cause market pain. Here's what you need to know. First up, market volatility has reignited on tariff concerns. And so what we're going to do is, normally this is a news review, not a markets review, but I think we've got to look at the markets as well. So we're going to kind of do both pieces together today. So what's going on? Well, the U.S. is putting tariffs on its trading partner, and it's kind of doing it in an ad hoc sort of way. What I can tell you about at least the market volatility component of this is that the market really doesn't like uncertainty. We talked about this in the lead up to the election, and there's a tremendous amount of uncertainty around these tariffs. Sometimes they go on, they come off another day, now they're coming on, but maybe there's some tweets that say they'll come off this afternoon. This is sort of like a worst case scenario for the stock market to have to go through something that is economically impactful, so uncertain, and changing so rapidly. So what we're doing is we're putting tariffs on our top trade partners. And what I thought would be good is to pull up this schedule of what's happening with tariffs where. And if you listen to the President's State of the Union last night, then you know April 2nd is really the big day. What's happening right now is we're putting tariffs on Canada and Mexico and China. And this is really sort of like more fentanyl driven. So this really isn't sort of like the big tariff stick that is being swung here yet. That is being reserved until April 2nd, when reciprocal tariffs almost globally come in play. So for these Canada-Mexico tariffs, I'm not too worried about them. I think those can be resolved pretty painlessly with like a photo op and some border stuff. So I'm not too worried about that. It's the bigger tariffs, April 2nd and beyond, reciprocal tariffs specifically, that I think are going to be more economically impactful and sort of hanging out there right now. Now, with all this uncertainty, and of course, as I mentioned, the stock market is an economic vehicle. And so with economic uncertainty, which is the worst thing that the stock market has to deal with, I'm not surprised that the stock market is in the midst of a correction right now, maybe to the tune of 5, 7, 8% from its recent highs. But and that's tough. And certainly my phone has been ringing off the hook for much of the last week, but we're actually okay here. And the reason why we're okay is here's the orange line, the 50-day moving average. Purple line here is the 200-day moving average, which actually tells us, is the uptrend intact or not? And what do you notice? Well, you notice we're back to levels, roughly where we were in September to November of last year, which isn't that bad. But also we're above our 200-day moving average. We haven't even gotten down to touch it yet. And so what that tells me is the uptrend hasn't ended, at least as of right now. And this looks like the normal consolidation, the normal chop that we talked about last time. Giving up our 50-day is painful, but the 200-day is coming for support, and we're not that far away from it anymore. In fact, we had sort of like a fake touch of it just in yesterday's session. That would be Tuesday's session, depending upon when you're watching this. And so I just kind of wanted to show you what this process looks like. Every correction feels like its own unique thing, but to my eyes, no. I've seen, I don't know, how many of these have I seen now? Probably at least 100 across my career. So I'm going to take you all the way back to the old age of 2023, which was our last test of the 200-day. And what you notice here is a very similar pattern to what we're seeing today in the market. Come down to the 50-day, fight around the 50-day for a little bit, then we release and we let it go. And then we work our way down to the 200-day, a little test below the 200-day. And then from here, this was our last test. And then the market sort of bounced off the 200-day and went very strongly since then. And the S&P 500, or SPY, what I'm showing you here, is 576 today, and this chart only goes to 476. So there was another 100 points off this scale of growth that would come after this 200-day test. So what does this mean? This means that 200-day tests are normal. They really don't tell you anything about the health of the uptrend. It's regular that we're going to give up the 50-day and test on the 200-day, and how the market deals with this 200-day test is going to tell us everything we need to know. But all right, so that's the bad. The bad is we get market volatility. The good is the things that Doge and Trump are doing with tariffs are actually kind of correct here. And it pains me to say that because I know, everything is extremely politicized these days. But look at what's happening with interest rates with the 10-year Treasury. The 10-year Treasury has dropped from about 4.8 at the start of the year to 4.2. This is bringing interest rate relief to things like mortgages, auto loans, furniture, etc. This is real savings for real people in the real economy. So what we're focusing on right now is the tariff side of thing, and that's the pain. What I don't want you to lose sight of is there's a positive that's coming because of all of this mess. And the positive is in lower rates and eventually tax cuts as well. And those tax cuts, those are primarily going to hit, on the corporate side, which is a direct impact to the stock market. If we look at the short end of the curve, if you'll remember, last time we talked about rates, Fed Fund Futures said, hey, you're not getting a rate cut till December. Well, now the Fed Fund Futures are pricing in 3 full rate cuts before the end of the year, taking us down to maybe around 3.5%, if not less, on interest rates. This gives interest rate relief to things like margin loans, short-term, floating rate debt, all these sorts of things, a lot of corporate debt, term loans, SBA lending, etc. So this, again, is another very strong economic stimulus that's coming because of what Doge and Trump are doing. So the negative is we're getting some volatility right now. The positive is there's going to be a payoff for all of this pain at some point in the future. So what does it all mean? Tariffs cause market pain? Well, pain has come for the market and is coming for the economy. That's, still off in the future, but we should start to see it around March. And I'm glad that I used this word pain. If you'll remember in our video on Doge, I talked about pain, the big P word. So pain is here. And because of this pain, the market has been quite volatile. However, even though the market has been volatile, currently the uptrend, as measured by the 200-day simple moving average, is still in place. So we really don't need to panic right now. We don't need to do anything with your investments. Things still look positive here. And I think what you need to do is you need to look through the pain of tariffs and Doge and see what benefits these things are unlocking. And the benefits I'm talking about specifically there are things like tax cuts, which is basically just like a direct improvement to businesses' fundamentals, and rate cuts, which would be stimulative for the market. So these things, I'd say, my take is it's a timing issue and not necessarily, hey, we're doing the wrong things here and this is bad. The timing is we're having to take our medicine first before we feel better. And so we're just in that medicine phase. But tariffs are absolutely causing market pain. We've got some volatility here, but I'm not too worried about it just yet. And the reason why is I think there's some positives that will be coming to us in the fullness of time once we get through this process. So there you go. There's the weekly update and a little sneak peek of the market update. I'm not beating sweat yet. We'll see you this weekend for the markets review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.